Hey guys, welcome to this video. In this one, we're going to talk about the euro dollar going into 2023. It's almost the new year. I'm sure lots of you are enjoying yourselves. I did mention that a bit in my last post, but I will say again, happy Christmas, guys, and happy new year. So let's touch on to currencies as we move into the new year. Going through 2022, of course, we had quite a large slowdown of red candles pretty much from this point where my mouse is now. Failed through support, the market gets absolutely trolloped, and then you get that rebound. So we looked long lower at this point. We saw this and we thought, okay, well, price has fallen very far, very fast, come down and down and down and down and down. And finally, you get some price rejection. And that's because buyers say, okay, well, this price is really low and I'd like to take it long. I'd like to get a good deal. I'd like to get it fairly cheap. And I'm going to look for an up move. And of course, once the market springs up, you see early exits, bounce back, relongs, and you probably have relonged it if you followed me all the way up. Now, your job is to decide, okay, well, I've got this long move occurring. We're part of the way through it. We've crashed through the 38.2 fib, moving on towards the 50 and some key moving averages. Where is it ideal for me to start looking to the short side? Now, really what it's going to come down to essentially is your risk appetite. Are you someone who is okay to take earlier shorts, or do you want to take later ones? So your first point of inference is going to come at this point, and you're likely to see this orange colored, as you can see, 20 moving average move down slightly as the price comes up, because the price will get more average, if you like. So that would bring you around your 50 fib. So you have to think to yourself, okay, so the value on the preceding move, we came down from 1237 all the way to 0.95, just above 0.95. What would be ideal in terms of value for me to look short? So 50% of the previous move is ideal, and that represents short zone 1, because we're looking to short when prices are slightly higher within that grand scheme. Okay, so this price has already come down, and we're looking to get in on the rebound for a place that's fair to get a good deal to the short side so we can get a good price. Now, after looking at that level that I've just noted out, we can start to look slightly higher for further short zones. And again, that's going to come around key price action levels, and as we get closer to those high moving averages, okay, because we're really coming back. Those moving averages are acting like magnets, pulling that price together, and we're likely to see a better price to short around here. So this is your second short zone, okay. You've got short zone 1. And remember, guys, we're not looking for 1 point to short, okay? It's likely that we'll need to spread our risk slightly and diversify, because really that is the key to any trading plan. You're not looking to get one little price point, one trade, and make money off that one trade. You're going to need to space yourself out and look for ideal short zones. So short zone 2 is represented at that point because of those key price action rules. And if you're not familiar what they are, just go and grab my free training under this video, because that's going to help you understand what they are and how they work. So if we look slightly further above, you can see short zone 3, and you should now get the picture that we're going through position sizes. We've got 1, 2, and 3 as the market moves up. And that is just essentially because we're looking to find an average price on the move upwards so we can exit on the falls for any gains. Our job as a trader, when markets are moving up, is to scale into the market short. We're not looking for one big trade. We don't want to go, okay, here's short zone 1, I'm going to lump everything into it, because we know that that level might not be reliable. It's only 50% of the previous move. It's not an enormous amount of the way up, okay? So that is going to be a place where we start to ease in. It's not going to have incredible risk. We're not looking to sell our houses and short everything, okay, and have a massive load of margin. We're just looking to ease in. We want to see that market come up to those previous moving averages, get a fair price to the short side, and look short. And as the price moves up, that's the same thing we're going to do. Now, we can incorporate any hedging methods if we need to mitigate those losses, like I do. Again, see my free training. And we can also drop our position size if the market is too vicious. If we start to rip higher, you can lower your position size and scale in the market, okay? And as we move into 2023, if the sentiment persists to the upside as the market recovers, we may see higher levels. You're not seeing a massive bounce off at the moment if I flick to the daily, simply because there isn't enough sentiment to do that. You're not seeing a massive pull down because there's no reason for the market to do it just yet. And I would say eventually that's quite likely. Anything that's looking higher up, okay, you can look to the short side at short zone 1, which we just denoted. Anything lower down, we want a significant pullback, and we're going to look long there. That's going to form our long zones. So thanks for watching this, guys. Hope that really helps. Any questions, let me know, and come along and join us by using the links under the video. See you in the next one, guys.